ended one. Okay. Where's my new? Hello. Good morning, Marcus. All right. The beginning of the year is happening. The market is looking very interesting. I put a hedge on 3 days ago. Happy New Year to you too. I put a hedge on 3 days ago. I just got a sale on something. Let me double check. Uh-oh. Am I getting problem here with being able to click on things? Usually means I got to reboot the Thinkorswim. And relaunching. All right, relaunching. Okay, now let's see. Yep, I was able to access that. Okay, and okay, I sold a little bit of Lunar. Fine. Oh, okay. I thought I got stuck again right away. No, we're good. I don't know if my voice is still a little bit hoarse, but I am recovering from being sick the whole holiday break, pretty much.
Battery fully charged.
Okay, had to cough there. All right, Lunar, I just got a little bit, there we go, a profit target hit there. It is way up. I am up. Lunar 93% since the multiple entry cost average that I've got. But from the first entry, which was 942 roughly, I'm up 137%. So that Lunar trade going very good, and it is stacked. It is amassed. It's a multiple entry at this point. Another one this morning that's been firing off some profit targets hit is Gigal, GGAL. I mean, this stock has just been looking great. VRT, let's see this. So market's going to open in 22 minutes. Oops, it looks like we lost the Twitch stream. What happened there? Try that again. I wonder how that happened. Just checking if this Twitch stream goes. Okay, good. Looks like it is going. Sure how this got skinnier here, and now we have a black line between these two sides, but that'll work. That's all right. So, yeah, we're looking good on the market. Actually, so I was trying to get to, before we got something happened there, I forget, is that 3 days ago I put a hedge on because we broke a pivot low. It was looking like we were going to break a pivot low. We did, but we've actually bounced right off of it, right off of that. And let's take a look at that on SPY as well, S&P 500. Excuse me. S&P 500 looks a little more resilient, but it's still in bearish formation. Do I have that tool? Yeah. Still in bearish formation because of this big red day right here. Something so strong like that usually acts as a catalyst and a sentiment permanizer, So I'm looking for this market to do something like this, continue to the downside. It might even wedge for a while before perhaps January 20th when Trump takes office, or I don't know what it will be before the market has full confidence. But it looks like, we're in somewhat of a bearish formation right now. Bearish catalyzing sentiment because of that day. And, that keeps me on my toes, and I did put a hedge on around here, but I took it off on this day right around here. So that was unnecessary in the long run. It's what I've said before. It's like what I've learned in almost all bull markets is hedges are a waste of time, waste of money. You lose money because by the time you're like, maybe I should take this off, you neutralized gains that you could have kept. So you just got to go with the flow sometimes. You just got to go with the punches in a bull market. Back to QQQ. So that would look something like, I put that line there. As you can probably see it now, it makes sense. This line right here. So, we're opening right at that line. So maybe we'll trap some bulls with some upward movement and then come back down and fill the gap and be up by the end of the day a little bit back to where we started and we get a little doji, I mean, that would be the most lucrative thing if bears are really in control of this market right now. But I believe the bulls are. So, but you can think whatever you want to think until the cows come home. But the market, as they say, the market can remain. What's the saying? The market can remain basically a mystery longer than you can remain solvent. So it really doesn't matter. You still have to be careful. And if you have a thesis on something, timing is, you can almost never have both timing and directional prediction. You can have a directional prediction, but sometimes the timing's off. You can have the timing right of something with no directional prediction, but if you try to put them together, get the timing of a directional prediction, it's very hard. However, when it comes to breakouts and the likes, we do tend to have favorable setups that we go after. However, really, like with the market, it can be difficult to predict. Often what you think is going to happen can get tabled for a few days, maybe even weeks or a week. And then you lose faith. Maybe it goes the other way. And then you look back at it, and all of a sudden it's doing what you thought it was going to do. It's just you had your timing off. So, I think that possibly this was quite a strong galvanizing, catalyzing negative day, and that it really needs to be surmounted. And I think probably health-wise, yeah, I'll check that out. Health-wise, as far as the market goes, it wouldn't be bad if we just went down and corrected and refreshed for a few months so that we can really build up. It's like when a pitcher takes their hand with the ball and takes their hand back in order to throw it forward. You have to, in order to have a nice forward swing, you don't throw a ball from starting out here. You have to start back. So, it would be nice if we could wind up, if we could pull back, get a nice wind up going. All right. So you want me to look at SMCI, I think? So SMCI is dead. What did you ask me? Thoughts on SMCI? SMCI is dead. Remember, it went on this huge run. That's when everybody got interested. Everybody's out now, and it I think it has some even regulatory concerns. It's dead. Plus, did it do a reverse split? No, did a normal split. Okay, I think that's good. Yeah, no, it's below the 200 moving average, bearish. It's not doing its growth cycle thing anymore. SoFi, I think I'm in that. Yeah, I'm in that. So this one looks good. So I'm in SoFi now for I've been in it since November 19, so almost 2 months now, holding through there. Actually, this breakdown recently came back to my break even, and now it's bounced and it's coming back up. But it definitely is acting like it's in bearish formation because of the galvanizing day as well. I mean, it's 4 points to a downtrend at the moment. But I'm still in it. We'll see what happens because, anything can happen. What could, for example, you can get something like this, and now what do we have? An inverted head and shoulders. So you just don't know. Anything can happen. And then all of a sudden, an inverted head and shoulders is one of the greatest signals. And now it's moving up. So, I mean, you have to have your stops. Technically, this thing broke pivot right here, but it actually kind of bounced through it. But then it definitely broke pivot here. So this thing has turned into a negative sentiment. And with longer term holds, you want to have a line in the sand that's usually like the 50 moving average. And in this case, though, it bounced off the 50 moving average. And it never closed below it. So that's a good sign that it's holding the 50 moving average. But maybe it's going to do some things like this. And then on earnings in about a month, we'll find out if it breaks out and runs, or if it craps out and bleeds. We'll see. Let's take a quick look at Bitcoin. What time is it here? All right, we got 12 minutes until the market opens. What do you think, Marcus, of what I said? SMCI and SoFi. All right, now as far as Bitcoin goes, it's also in a consolidatory period right now. Essentially like that. And it can do that for a while. Like, for example, this pullback here lasted from March until November. So 5 to 11, 6 months. Hey, good morning, Randy. Thank you. Great points. Yeah. So 6 months. So, Bitcoin could do that again. It could go through a 6-month cycle here of just holding. But one thing that I will say is that if Bitcoin starts leading, I would take it as a leading indicator of the entire market, not just cryptos. Because I have found that Bitcoin has been quite a leading indicator. But I have seen some interesting decoupling and independent sentiment coming from the Qs also the last week and a half of sessions, the last 5 to 10 sessions. So it's all a little bit of a juggling act. And you never quite know anything. You just get better at noticing everything. And so that allows you to have confidence or less confidence. That conviction level is what allows you to be more gung-ho about grabbing things. And that doesn't mean necessarily size. That can just mean just grabbing things in general, just whether or not to do it or not, or to sideline, And sometimes sidelining just means not opening new positions. I have like 70 positions of different sizes. I'm kind of like in a sideline mode right now. However, I am very, what's the word? Interested. I forget the word. I'm very, the things that are on the market are looking like they're possibly going to do something. So I am carefully getting some pilot positions here and there. I added some, I think every day, the entire last few weeks, there's been some opportunities, but I'm very diligent and selective. So But, the positions will take care of themselves. I know where their stops are. There's no reason to get out of anything unless something huge is known, whether that's on the stock, the sector, the theme like AI, etc., or the entire market or the global economy or an impactful economy. So if nothing major big happens on an individual stock all the way up, then it's, I keep my stop where it is. I have many things that are close to their stops. Well, not terribly many, but I do have things like, let's say Palantir, it's dancing the dance. My stop is right here. It's close. It's nearby, but it pulled up. Like its nose was getting close. But Palantir is one of the best acting stocks this year, relatively strength speaking. If I go to this view here, we have the relative strength meter right here coming up. There it is. See, it's at a 99, which is the top it can go. That's 100. So, and it's been that way, very strong, and in an uptrend without breaking pivots. Another one that I have that's doing really well is CLS, and this has a 98 RS rating. Others are Marvell with a 97. I'm in 70 positions. We could do this all morning if we wanted to. Robinhood, but these are some of my bigger positions. These are 3 entry positions. So that means there's been 2 add-ons. They've pyramided and they've snowballed. Robinhood is at a 98 relative strength. But I let, the size I let happen because the stock is making it happen. I follow add-on rules and such. So if the stock is going, you don't want to get huge in the beginning and then find out a stock is not really going to be snowballing and following through, and that it had just a limited limelight moment, and then it flatlines or even fails out and stops out, and then you had big size. You could do that if you're subsidizing that with the profits of prior profits in a different stock, etc., in your account. But my method that I like after 25 years of trading is the a mass type system, which is to start small in a pilot position and then let the gravity of the stock start to pull that down into a snowball, and then eventually the snowball starts moving of its own accord. You get multiple entries. I have 1 4-entry position, which I'm pretty happy about, that I'm seeing 3 entry positions moving into 4th entries, and that's GGAL here. But it's not my biggest position, ironically enough, and that's because it's very volatile. It has the ADR is 5.4%. Stocks can be even more volatile than that, of course. But for example, just a breakout move difference here, 13%. So, the size, it would be nice if the size were bigger, but it is what it is. The volatility dampens it down. My largest position is Palantir. Second to that is I believe is CLS. I'm just scanning through. Okay, and then third is Walmart. And the reason why Walmart's so big, it's only a 1E position. It's only a 1-entry position, a first entry. It's not even amassed or snowballed. But the reason it's so big is because the volatility is so low, 1.64% ADR. Since the entry over here, it moved up 13%. There's not a lot of I probably can free up that position. There's not a lot of magnification gain, going on there on Walmart because the ADR is so low, 1.64%. You really want to focus on stocks that are over 3.2, 3.5, 3.6, 3.8%, mid threes, but higher would be better. I'm up 125% on pilot position in Qubit. This is quantum computing company and theme. And it's just a first entry position. I'm up 125% in that right now. Was up 250% at one point. But the stop is so wide that it's a very small position. It's one of my smallest positions. And yet I'm up 125% on the money that I put into it. But that just shows you how volatility can scale things. And it becomes a self-fulfilling prophecy. If you use a system that builds up and stacks and rolls profits into larger position and continues to add on and scale up on things that are working, they tend to work because they're working. And then that becomes a feedback loop. They're working, and so then it tends to work because they're working, and then it tends to work because they're working, and that keeps going until it stops. And the reason why you have a 2-to-1 50% take profit strategy that I couple into the system is so that when it is over, you've been skimming profits all along the way, so that even when you have to cut and run, you either have subsidized your downside, you've broken even, or you've even made money. And you start small and you build up to big. And this is what I've noticed over 25 years. Seems to be the way. And I am probably going to be adjusting and tweaking that all year long, continually, as I have every year for 25 years, figuring things out. So, I'll be adjusting that. This year I want to try to find the sweet spot. There should be a sweet spot between getting into small initial positions and eventually how big they can become. And I want to get it so that I don't get knocked out of positions after a fourth or fifth or sixth entry before I got a chance to reap some nice rewards. So we'll find out, over time what that sweet spot is. It may be, instead of starting with a 0.25% initial pilot position, it may be starting with a 0.5% or even a 1% position size is better. So we'll find that out mathematically as we go along. All right, market's opening in 5 seconds. Here we go. I just got a fill on GEV. Yeah, I can see that opened up higher. GEV. And it looks like I only have a stop left after that. That's because it's a high-priced stock. I did not possess a lot of shares. But I only have one left. One share left. And I just sold one. So that means I sold half my position on this gain right here of 8.3%. Is that what it shows here? For some reason it shows 5.6 or 6%. And yet actually I have 7 or 8%. I'm not sure why. The different price there. All right, Reddit, I have that. It's getting alerted somehow. Okay, Reddit. This may be an add-on. I set up an add-on alert here, alert line, and it is happening. So I'm going to pull up Reddit here, my holding. This is a 3-entry added-on position, and I could raise my stop to 150. Right now my average price is 140. So I could add one share. Let's see what happens. Trying to get my average to 150. See, that brought it up to 145. Oh, what happened there? Oh, and it just took profit at the exact same moment. Okay, now I'm going to add it back in. Gee, thanks a lot. I happen to hit a price target right at the moment, same moment as buying. Okay, I'm back in there, and now let me see where my next take profit is. Reddit. 198.88. Okay, I can keep that there for a minute. So yeah, my new break even is 152.7. That's probably not correct. You have to do some pretty complex math because you need to factor in also prior profits and it's basically all your transactions. This is what I discovered over the course of the last few months running the UMass system, is that it's not just about averaging your currently held remaining shares with some new shares that you buy. Isn't that interesting? Because that's what we said. You know, if you initially bought 100 shares or something, now you have 50, and then you buy 50 more, let's say, at a certain point. Your break even, because you sold 50, right? Your break even is not the average between the price of the 50 shares you had and the 50 shares you are buying. Isn't that interesting? Why? Because your break even has been bought down by the profits you took already with those other 50 shares that you sold as it moved up. And so actually your break even between those 2 points is lower. And that's just very interesting, and it becomes complicated to calculate. I can show you guys how to do that. I think if I end up doing a class this week, I'll show you guys how to do that in class. What's this down here? That's a moving average? Oh, okay. Finally, the 200 moving average is showing up. CLS, one of my stocks, is also crossing a trend line, but I need to quickly move things here. I'm going to put that I added a share, which I did before, right about here. I can take off this alert line. Maybe I can put it way up there to let me know when it gets past 200. I just got a price target hit on something. Let's check out what that is really quick. See what's moving. Rocket Lab. Okay, so we'll come back and we'll check on that in a minute. Reddit. Yeah, so I need to move my break even now, which is not correct. I'll do the correct math in just a little bit. But my break even to 152.70. What I'm saying is I've been taking profits on this. I've been taking some exits to the point where 152.70. It's probably lower. It's been subsidized to be lower. And I'm going to make the 150 my new stop on Reddit. Key psychological level, etc. So I'll come back later and I'll recalc that on Reddit. There's some profit targets already set in there. I've got what? I got 1, 2. I have 2 more sell orders set up there. I guess I'll just quickly set, so we don't have to think about it later. I'll quickly set up the exits on that. Kind of got to stay diligent about that. You don't want to go back and go, oh, what was I thinking? Oh, gosh. The time to do it is kind of like in the moment. So I'm looking to set up a 2-to-1. I'm doing that with this tool in TradingView, so I don't have to do too much math. I can just rough it. So 2-to-1, roughly 250 All right. So I need to sell 3 or 4 shares, half of my position of 7, 3 or 4 shares. I'm going to err on the side of selling more because we're extended and that's quite a bit of upside. I like to hit all those points from here, which is 185. So 250 minus 185 is $65. And I just said I want to divide that into about 4 points. So I will perhaps do that every 15. 185. So just under 200, then 215, and then 230, and then just under 250. That should do it. All right, so let's put that in. Looks like I may already have perfectly set one for my last limit orders that I have set up. No. Actually, wait, where is it then? Oh, there, boom, tick, come back. Okay, 198.83. I'm going to change that to 198. 199. I guess I'll need to zoom out a little bit here. 199 and change. Zoom out. Gosh, why it's being so testy with getting me some of this view here. Well, I could say this is too much level 2. Okay, that's better. So 199.88, that'd be fine. And then 215-ish. So where's the other? I have another one I can move. Where was it? There it is. 211.88. So I'm going to move that to 214.88. Now, I just need to set 2 more. So 1 under 230. $229.88 and 1 under 245. Since it's exactly another $15 up, might as well be accurate. Okay, so that's 4 to the upside, and then I have a stop already existing to sell 3 at a certain point, and that was probably the last stop point, which is 132, but I need to raise that to just under 150 now. See if that's true. Yeah, I got that 130, and I need to raise that up to like 150. I'm going to move it up like that. Let it change it, scroll up a little bit, move it up. I'm trying to get it right under 150. Sort of dragging it along. Depending what platform you're using, you do that however you got to do that. Just under 150. There we go. I'm going to do 149.39. All right. Now CLS, I hit a profit target on that, or I saw an alert, or yeah, it was an alert, which said that it went above the point in which I wanted to consider adding or raising my stop, and yet it's pulled back. While we were working, it's pulled back. So that's another good reason to why, not to just immediately jump on something. The other thing was Palantir, CLS, Reddit. What was that? One other thing we were going to go take a look at. Reddit, was it CLS? No, it was something else. Rocket Lab. All right. Just got another exit on IonQ, so we're going to check that out in a minute. But over here on Rocket Lab, there's nothing I need to change. I already added at this inflection point a week ago, and it came back down, and then now it's inflecting again. I already did it. So I can't raise my stop or do anything except continue to take profits and reap the harvest. But good deal there on Rocket Lab. It is a 2E. It's been bought into twice by me. It's a 2E position. All right, IonQ. I mean, I'm tempted. I could add and then raise my stop to maybe 36. Yeah, that's probably okay to do. I'm super safe here right now, the way it is like this, with a stop way down here. And this has been a long flag. So, all right, I'm going to add on IonQ, which is a 3E, a mass position, and 36. I'm trying to get a cost average of 36. Okay, so I'm going to buy one share. I'm going to see where this goes. Trying to get this average price to 36. There's 33, so I'll try another one. And this is just how you could do it sometimes manually, cowboy style, I like to call it. You don't have to pull out the Einstein calculator. All right, 34.60, and remember I'm trying to get up to about 36. There we go, and now 35.50. So that pretty much puts me where I needed to be put. I added, I believe it was 3 shares today. I added 3 shares, 1, 2, 3, yeah. So I'm going to mark that. And Randy, you know your PCS system. You got to get that loaded and working. It's a good market. You should be completely driving a PCS portfolio if that's what you like. Just because I'm doing this doesn't mean you have to change. This can be a little bit more active to deal with. All right, number one, I know I'm going to move my stop. 36. Now, I'm going to write in my new cost average. I probably can buy one more share because, like I said, the Endeavor has been subsidized by profit taking as well. So my true cost average is probably lower because of profit taking that has occurred several times. So I'm going to do that. I'm going to buy one more share. I might even buy 2, but let's see what happens to the price. 36.2. It only went up 75 cents. So I don't think I'm afraid of adding one more to make it a nice round 20. So let's do that. This is cowboy style math. So 36.88 is what it says. And that's my first inaccurate toss reported break even, 36.88. So I'll just go with that for the moment because that's more conservative. It's inaccurate, but in the favor of being more conservative and getting out before truly your break even. Okay. So 8, it's actually rounded to 8.9. So there we go. I got my break even. This is a toss reported break even. So I sometimes we'll put that on the chart. Toss. The true break even. Let's just go ahead and do it right now. I'm just curious because we've been on top of everything else. And by the way, how many did I just add? I added, let's go in here. Filled orders. IonQ 1, 2, 3, 4, 5. Is that what you guys thought? 5. I added 5 here. IonQ. Right after I had taken profits too. No, I don't think it did actually. Never mind. But let's see. Let me zoom out and see where the next profit target is. 52. It's actually pretty close by. So we'll recalculate things in just a moment. Okay. So this is how you do it. It's kind of crazy. Hopefully this makes sense to you. So now you go into your brokerage and search for all the transaction history you've had on IonQ, for example. Everything, as far as for this position that you've snowballed or whatever makes complete what you're trying to calculate. And in my case, starting here, adding here, and adding here. So I'm looking for 4 positions and take profits as well. I'm searching that in my history, and it's going to pull up all the transactions. And believe it or not, you basically got to do the matriculation. You got to add them all up. First entry was on this was November 11th, but I do see in September I traded this. No, there's something's not right because November, not 11, November 7. Okay, that I see. But it looks like in September I did something and it's not on the chart. Could have been a day trade. I don't know why I didn't mark that up. In any event, this position starts on November 7. So what I have to do is start matriculating everything in reverse. So this is the weird thing. You could just negative your final result if you don't reverse it. But theoretically, technically, if you buy a stock, you're at a debit. Does that make sense? In other words, you're pushing your money out from your pile onto a table that's not yours. And whether or not you do well or not depends on how much you take back. Does that make sense? So when you buy a stock, even though it's a plus number of shares, it's actually an expenditure. And so you need to start there. So I bought 33 shares. I'm going to try and go through this kind of fast. 33 shares times 19.0302 is what it says. And then you, and that's a negative because you bought. Then you add, and I have 2 share exits. In other words, I'm taking 2 share exits at different points, at about 5 different points. So then you got to add, and I put in parentheses 2 times, and it's a positive 2 because I'm taking them back. 2 times 19.75. So now you understand. I'm going to just fly through it. 2 times 2050 plus 2 times 2130. So what's happening now is my average is going to start to reflect my taking profits as well. My cost average, 22.05. I'm not sure if I just did that twice. 22.05, nope. That's good. We're good. Plus another 2 times 22.75. 22.75 plus 2 times 23.55 plus 2 times 24.30 plus 2 times 25.05. So at that point, before adding on, I'm at a debit of 269.49. I've sold 2, 4, 6, 8, 10, 12, 14, 16 of my 33 shares and have 17 shares left. So you see how that changes the cost average. Hello. Welcome. So then what I did, and you could put a positive plus, but then minus, I added on minus 5 times 25.585. And then I added 2 more. So I added 7 on that day. So every transaction you have to take account of. Plus, excuse me, actually it's minus. Minus, I have 1 share at 25.56. Obviously, you don't need to type in 1 times. Minus 25.5989. It just becomes a direct debit. Okay, now I have a bunch of single exits, and we're halfway through now. So we're getting there. I don't need to do the parentheses and the 1 times because these are 1 times exits. So it'll say negative because it's quantity sell share, but it's actually a positive. You're getting money back. Positive 26.48. I'm getting $26.48 back. Plus 27.28 plus 28 plus 28.86 plus 29.64 plus 30.44 plus 31.24 plus 31.98 plus 32.82 plus 33. I think I might have mistyped there. 33.62 plus 34.40 plus 35.20. Okay, now if we look at that, okay. Now look at that. It's very interesting. At this point, look at that, you guys. At this point, my holding is nearly free. See, it says negative 78. So I'm only down 78 bucks. And I'm still holding, I don't remember at that point, but I had 17 and then I added 7, so that's 24. And then I sold 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Half, so I have 12. So I have 12 shares of IonQ at, whatever, roughly it is $36. What's 12 times 36, guys? Anybody? 10 times 36 is almost $400. But I'm only down as far as I'm only out of pocket 78 bucks now, you see. So this is why, you do it this way. So now I get to the point where I added 9. That's this one right here, guys. 9. I added 9 and raised my stop. And it says my break even's 29, something, whatever. But that's not true. So what I did then is I bought 9. So I'm going to add a negative 9 times 37.23. So now I'm at a debit again. See, 413.69. And added 9 to what did I have? I had 12 shares. So if I were to divide that by 21, my cost average is 19. See, I have my cost average here as 29. You see what happened? So my cost average is actually 19. And we're not even done yet. Okay, because now we're taking some more profits. 1, 2, 3, 4, 5, 6. I've taken 6 profits after that point. So we go back over here. And we add money we got back. We took 1 share exits at 39.95. So I got that much money back. Plus 41.95. Plus 43.95. Plus 45.95. Plus 47.95. Plus 49.95. I must have typed something wrong. No, that's right. Okay, plus 49.95. Okay. So now, up to this point, I'm out 144 bucks roughly. That's what you can see right here. Are you guys following along? You guys even there? We're almost at the end of this analysis of your subsidized break-even. Okay, so 144 bucks I'm out, but I have 5 minus what I have now, 15 shares. So if I were to just say, hey, what's my cost average at that point? Divide by 15. I'm not sure why it's not showing me. Let's see. Damn, I have too many parentheses. Yeah. Okay, I did. My cost average is now 9.59. Way down here. So I'm holding 15 shares at 9.59. And so this is a bit of the power of taking those profits along the way. Really important to take those 2-to-1 50% exits because you're paying down your cost average. So even though TOS says my cost average is 36.87, we'll get that in a minute. Okay. Actually, at this point, it would have said 29. Actually, it's 9.60. And that's because I've bought it down so much through all my profit taking. So can you see how safe you are by doing partial profit taking and sizing up using the amass system? It creates a ton of padding. Now, let's do the add-ons that I just did. Today, I added on 5. So now I'm going to go into debit, and we're going to divide by 20 total shares because I'm adding 5 to the 15 I had. We're going to add some debited shares, and that's going to be, they're all single entries. So I'm going to be minus 49.96 minus 50.05. These are one share add-ons that I did at certain levels. Minus 50.04 minus 49.58 and then minus 49.55. And so now my real cost average as of this moment, by adding back on, yes, it was $9.60, but now I added on. So obviously, just think about that. If I had $9.60 cost average and I added on at roughly $50, and I had 15 shares at 9, let's call it 10. I had 15 shares at 10 roughly, and I'm adding 5 at 50. You know, the average is going to be somewhere in there, but weighted maybe more towards the 10 because I've got 15 at 10 and I'm adding 5 at 50, right? And you could just kind of, if you even could guess some of this shit, which I can't, you know, but if you could say to yourself, it makes reasonable sense that probably my cost average is down in the low 20s. Well, it turns out it's at it's at 1965.8525. This number right here, 19.65. So the actual cost average is not here. It's 19.65. So now I go down here and I put that in, 19.65. And as you can see, it's almost lower than my original price. My actual cost average, 19.65, there we go, is almost lower than the very first entry I ever got, but not yet. It could happen though, easily. I mean, it just coincidentally and mathematically, whatever. But you know, just a moment ago, before I even added the 5, it was at 9. Okay, if I got in at 19, how the hell do I have a cost average of 9? That's because of all the profit taking and the skimming, saying, hey, this position has served you well. You know, at a certain point, just think about it this way. If you buy 100 shares of something and the price of it doubles and you sell 50, then you have 50 shares at 0. Right? Does that make sense? Because it's at no cost to you. You are now have a position built entirely from profits. So I change this now from toss break even to real break even. And technically what I could do if I want, is that since I typed it all in, so I could go in here, put it back to 15, get rid of all of those 5-share add-ons, and 9.59, 9.599, 9.6 was my real break even before I just added on. And that was like down here, 9.6. So I can illustrate that, you know. It was way down there as I was taking profits on that. The last by the time of the last profit, which was on the 6th, which was like yesterday, but prior to that was like the 26th. But roughly down here at 9.6 was my prior real break even, way down there. So you can see I have plenty of room to add on. You know, it moved up to here when I just added on. TOS reports it as this. Can anybody explain to me in one sentence, you know, as quickly as you think you could summarize it, why does TOS think my break even on my venture in IonQ is up here at 37 when it's actually at 19 and prior to that was even 9? Why does TOS think it's 36.9? I'll give you 30 seconds to answer that. 29, 28, 25, 20, 15, 10, 9, 8, 7, 6, 5, 4, 3, 2. Maybe you guys are still typing and you're going to answer, but I'm going to give you the answer now anyway. The reason why TOS says your cost average is 36.89 is because it's only considering shares you're holding and those purchase prices initially and along the way. You understand? It's only the purchases that it's considering. It's not baking in your profit taking, which has reduced your average. In other words, if you were to have a stock, 100 shares or something, and it doubled, and you sold 50, it would still show your original break even, which was your original entry price. But as you know, actually the break even now for you is 0. It could go to 0 and you'd still have your original money. So that you can pay down your cost average through profit taking. And when you think of it that way, it helps you trade on top of profits instead of always thinking that you're going into risk with every trade you're open. Now, of course, if you have no profits and you've made 5 trades in a row and they all sucked and you've lost all of them, you're not in a profit, and that's why you start with a smaller position and you start to build things up and you try to make good decisions a teensy bit at a time. And then as things start working out, you have profits. And those gains help pad your expenditures. So you don't want to be sizing up on new entries. Otherwise, you'll obliterate your progress. You want to keep a static entry size that you always take, that you can snowball into stocks and positions that start to work and work and work, and size up that way, scaling up as it works out, so you don't obliterate any of those profits. And you're in using that method, you're using profits by scaling out 50% at up to 2 to 1. 50% up to 2 to 1 is the key. You're paying down your cost average as you're in the trade, and then you're adding on. And the only reason why getting back into something that you just took profits on isn't stupid is because you raise your stop at that moment. The only reason you add on is because the stop goes up. So the relative positioning, the relative risk that you're in didn't change because it moved up with your new position. If it had stayed where it was, if your stop stayed where it was and you were adding on, then you're increasing the amount of money you could lose by the time it gets way down to your stop. But since you're raising your stop, it's just like parallel moving things up. It doesn't change anything, and you've been profiting along the way, so your cost average went down. So that's pretty cool shit. And when you do it that way and you understand your real break even is, $20 on this stock, IonQ, it's up to you. It's your choice if you want to actually buy more shares to move your real break even to the new stop of 36. At that point, your size can go up geometrically. And if you get stopped out, the whole thing zeroes out. You didn't make any money. That's the only issue with that. So that's why I don't do that. But you can, in certain scenarios, it might make sense. But basically, at that point, you're letting it all ride when you do that. And it can make sense in certain situations, maybe a Walmart or something nice and smooth. Or even the opposite, where something's just skyrocketing and you know it's going to be a quick gain, you're going to get out quickly, and you don't mind just for like 1 or 2 or 3 days, just increasing size as it's breaking out, so you can just scale out or whatever, take some quick gains. It can be used in many different ways. All right, hopefully that was educational for you. I believe I'm going to stop the stream there, but give me 1 sec. Maybe we'll double check if anything interesting else is going on, and then we'll perhaps stop the stream there. Reddit, IonQ. All right. So isn't that crazy, though? I mean, it's way down there. Just think about that. Even though the break even from your initial entry is good, your real break even is much lower. And that's a representation of the profits that you've made on the thing. So long as you stick to, roughly raising your break even to your stop, or even, you have some padding there, because of the profit taking that's been going on, your break even is much lower. The trade has been highly subsidized, and it depends. It depends on if you've taken exits. If it got set up and you haven't taken many exits, then that's not the case. The profit taking, actually realizing some profits to pay down your cost average, is what makes that actually happen in the background. Then by doing it more theoretically, by using the TOS number, or whatever brokerage you're using for the cost average, which represents only your purchases, it doesn't bake in your sales, your realized gains, then you're being diligent and prudent on moving forward on shares that you own, but you have this hidden profit-taking mechanism in the background that's actually profiting. So you create a sort of risk-free, break-free engine by raising your purchased break-even cost average to your stops and nearby, whilst in the background, gold coins are dropping out. Ding, 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 and you're actually picking up those gold coins and putting them aside. And the whole thing sort of just runs itself like an engine, versus taking all that gold profits and packing it and buying it in to your new break even at its stop. That would cause it so that if it ever came back to your stop, it would zero you out. So that's not a good technique or philosophy necessarily. I have done that in 2 out of my 70 positions. So there can be exceptions. There can be spots where it seems to make sense. It could be just something that's so hot and it's been consolidating, it's been acting safe, and it's getting close to breaking out, and it's like, wedging up, and it's been doing that for a month or 2, and it's just really high type flag, and once it pops, it's going to go a little bit. So you might be able to risk in that particular situation dialing things up to where you're using even prior profits to size way up. But just realize that if the thing fails on you, you're going to give it all back versus not giving it all back. DJT, I've got an alert there. Let's see what it's about. Okay. Yeah, actually, that's just a remnant of an alert. I need to move that up to about there. 38.9. Let's make it 40. 39. 38.99. Okay, so I'll be alerted when DJT. Well, actually, I wouldn't mind getting alerted on this inner pivot cheat entry. What's the high on that? High is 37.30, so let's put an alert at 37.31, 30. So I have 1 cent of time to go make sure. And the time is 11 after the top of the hour, 10. And we're looking good on the market. Positions are doing well. My Palantir is having a little bit of a red day. Let's see. And that's kind of the worst thing going on. The market itself is doing well. Bitcoin's at 101,000. Also not liking what I'm seeing here on NN. I might have to let that go. Let's see. Oh yeah, look at what happened there. It's bounced, but today has been a day where it fell off a cliff. And that's a doubled up position. Am I completely out? Let me see. Delta. Oh, I still have some shares left. Filled orders. Did it not take me out? Is there no stopped out? And there is no stop out. Why is that? Filled orders. And do I not have a stop? Wow, weird. I did not have a stop on NN. And in some sense, that's unfortunate. But it looks like it is bouncing a little bit. So let me just go over to the intraday and look at that bounce. Okay, it's coming back. I'm going to sell just a small portion just to be diligent. It should have stopped me out at the right point there. Very rare that I don't have a stop on these things now for this system. So I have 30 shares, and I'll take out 5 here, which is basically a better price. I mean, not buy, cancel. Whew. Oh, buy. Sell. This order will cancel your open working orders. I mean, yes. Yeah. Don't look a gift horse in the mouth. I mean, it hit almost 10 a moment ago, and it's back to 13.47, and I'm at 18. So, yeah. Basically, I'm just going to watch this for a little bit and decide whether or not to dump it. I don't even know what the news is. Let's see what happened. There's really no news there. I'll have to check. Excuse me, stock twits. But I'll check that on my own time, guys. Thanks for tuning in. Hopefully I was very helpful to you. And we'll try and do this again tomorrow. Kind of liked how on Friday I wasn't streaming for several Fridays in a row in particular. I think for various reasons. There was even before the holiday break. So I may go into 4-day-a-week streaming mode this year to reclaim a little bit of sanity. Hopefully that doesn't affect, how much you love me. So do let me know if you think that that's a bummer, or if that's okay with you guys. If that's not okay with you guys, or if that's okay with you guys. Not here right now. Think about it. Let's see how it goes. Let's let it happen for a few weeks. Maybe. Let's see what happens. Let's see if I actually do it. But I think I might, make Fridays optional. Because they're always low volume days. Okay, well, good deal. Have a great day, everybody. I'll be here. I'll see you in the group. Continue to chat in the group. And we're good. Have a good one. Let's see. Wait a minute. I click stop. And maybe an alert came up somewhere else, but I'm not seeing it. Okay, there we go. All right.